Joining us now, David Rosenberg, president of Rosenberg Research. Give me your take. I mean, again, do you think the Fed, David, should cut, even though, of course, as Steve just said, they're not going to?
Well, I think that Alan Blinder was right in the Journal today. I think that the Fed should go. It may be just too much of a mea culpa for them to do it as soon as Wednesday. So I think at the minimum, they'll set the table for a September move, and I think strengthened further by what Powell's got to say at Jackson Hole. But I'll tell you the truth, I don't think you can rule it out entirely. It's not my base case scenario, but I'd say the odds are probably higher than the minuscule probabilities that the markets have priced in right now.
Yeah. All right. And why do you believe that the economy, deserves or is at least in need of perhaps a cut sooner than September?
Well, I think that what's happening here is that what Powell was talking about a couple of months ago, which he abandoned, which was that, the earlier inflation hiccup was idiosyncratic and really confined to a few items related to insurance, home insurance, auto insurance, health insurance. They've all begun to dissipate. Of course, the rental numbers are starting to behave a lot better. And look what's happening in the commodity markets. I mean, with all honesty, how could you look at what's happening with commodity markets, especially the base metals, and have an inflation view right now? And they're starting to see, although, look, the economy's not cracking, but it's not really about that. We are starting to see more slack be built up in the labor market. And so I think that that's really what they're focused on. The most important shift really by Powell and others at the Fed recently was the focus on the dual mandate. And the employment numbers aren't cracking for sure, although I think non-farm payrolls are really the odd man out in terms of all the gamut of employment indicators. But the reality is that most measures of resource slack in the labor market are beginning to go up. And I think that's what's on their mind right now.
And we'll, of course, get a fresh read on that on Friday. How focused are you on the other central bank meetings across the world this week? There's an important one in Tokyo, an important one in London. How much do you think those will impact the commodities markets, the fixed income markets, and how much should investors be paying attention to those as well?
Well, I think, as far as the Bank of England is concerned, I think that's pretty well priced in. The key is going to be what sort of guidance we get. The BOJ rate hike would be a big surprise that is not fully priced in. And so, look, a rate hike by the BOJ, that would send the yen even higher. And it's, of course, beginning to, the downward trend is finally broken. Hard to make book on overall what it's going to mean for the trade-weighted dollar. It probably comes out as a wash. But the one central bank that I think should be interesting to all of us is the one that resides right next door to the USA, which is the Bank of Canada. And the Bank of Canada has not just cut rates once, it's cut rates twice. And as I like to say, Canada is the 51st state, but we're just generally more polite people. So and if you actually read, if you read the commentary on the U.S. economy out of the Bank of Canada, their view, not just that, but read the beige book. I know that, we get the GDP numbers. I think there was a lot of non-recurring factors that supported that 2.8% upside surprise. But, the Fed's telling us all along that they're also listening not just to the government data, but to their business contacts. And as I read the last Fed beige book, it revealed that basically half the U.S. economy is already either in recession or in stagnation. And, of course, it's the other half that right now is carrying the load. But that trend towards a greater share of the economy heading into stagnation or contraction, that share is on the rise. But in answer to your question, I think the most important central bank has been the Bank of Canada. And what caught people really by surprise wasn't so much the rate cut last week by the BOC, but the forward guidance that they believe they have more to do. Now, there's more idiosyncratic problems in Canada as far as the economy is concerned. But look, we are integrated in the North American economy. And so you got to be thinking that if the BOC is cutting rates twice ahead of the Fed and saying we got more to do, how far behind can the Fed be? And that's why I think that I wouldn't rule out Wednesday. I just think the only reason why they wouldn't is more related to hubris and human nature and too much of a mea culpa based on their prior hawkishness. But I 100% agree that they should start. It's not even, I don't even call it an easing. It's right now just taking out the excess monetary restraint out of the system.